Hello from the children of planet Earth.
What is up, everybody?
Hello from the children of planet Hello from the children of planet
Great. How y'all doing today? A movement today off of PPI. Just a little bit. Core PPI month over month comes in flat and zero, no change. We have PPI, oops. Come in zero as well. This is the overall PPI month over month zero. And the year over year. Still kind of like close to being on its way down. Change in price of goods and services sold by manufacturers, goods sold by manufacturers right here. And of course, it's just going to mirror similar CPI. It's like in that same kind of look to it. Anybody speaking today? Market opens in 2 minutes. What's up, everybody? What's up, Warren followers? We're going to smash the like button while you're there. I love y'all. Give some love. Subscribe to the stream. Turn on notifications. We're live every morning. Let's get ready to roll. Bit of pre-opening movements. We rolled back to our previous build. So the issue hasn't been fixed. We just rolled back to the other build. Well, it should be, it'll work. The issue for the release will be fixed probably this week. So yeah, we rolled everything back, so it should be working to our last stable build. Things are good. Are you opening at resilience positive? We're inside the box. We'll see what we get here. You guys are reading market chat with Humble Trader's awesome stats. Did a huge back test confirming some of our stats and some really interesting data. We'll talk about that later today. That's pretty cool. All right, let's see what we got. All right, BLU 464, SPY near top of the box. So looking for, that's a pretty simple setup on this one. I've seen this one a million times this year. Get my pencil tool here. We have trade from here to there, etc. Red screen 0, etc. Like this. Any rejection here is bad. So opening, also supporting on top of the box. We can have a break here to DD if res is strong enough. Right here outside the box. Let's see what VIX is doing. There's no volatility, right? This is just awesome. Okay. VIX is opening way down here. So VIX still a continual decay pattern. So today, the key is to keep your eye on. Today, there's long setups inside of here. Today, I'm going to keep my eye on VIX. VIX can continue to decay. If there is a VIX break, I'm going to exit out of my longs and immediately, right? Just to be careful. PPI could be catalyzing some sort of day. We've only moved like 10 or so points. I don't think this would constitute a catalyst. Just in case. Double check the tech chart. See me any red lines in front of us. Oh, let me roll over to the new contract. MES Z23 F.US. Oh, I already have it there. SUH. There we go. That's a lot better. It's about 47.31 up near the top. This is really tight. This is a good area. This is about what 4 points a drop inside of here. That puts some futures on the S&P side. 40.64. 30 is about 4 points lower. About 46.96 is where that hedge pressure low is. Right about here. Ooh, it's a big dot. It's a long on the box, yeah. Already looking good. Didn't take long to analyze this. Give a good look to it. So Humble did a statistical back test. We'll talk about that really quick. Long time ago, like maybe 2019, like 4 years ago, was the very first back test I did of the hedge pressure stuff. All different pieces. And this is what led us to create a lot of the things we created, like the rules, the alerts, right? The irrational stuff. So it was a series of conditions that led choice making based on the integrity of our calculations, like when they work best and when the statistical edge is there. Again, backtest or backtest, always like to give the disclaimer. It's just a backtest. These percentages aren't success rate of your trades, they're just percentages in the backtest. So we did a couple of spot months a couple of times and grabbed some data set from each one of them, just to test that the integrity was there for me to live trade. It was just enough. And the rule, what we call the zone rule, came out as if you open under the conditions. Let me show you like a example. Let's just move this over here. If you open in a zone, for instance, we're opening in the bull zone, as long as all of these lights are green, there was a 96.6% probability that you closed in this bull zone. So it became an option seller's paradise to know that as long as these lights are green, you didn't end up in the bear zone, but less than 4% of the time. So Ashton and others would play with vertical call spreads and credit spreads and things like that, to cash in on the where it won't go part of the trade. Now, that was just enough for me to decide, okay, well, if it's 96.6%, let me start trading off of it and see what the real actual percent was. And then I did my small account challenge on YouTube that year, the whole year, and I was running about 75% win rate as well. So it was enough for me to decide to live trade it. It wasn't really enough for me to just say this is what it's always going to be like, but it was enough for me to say, okay, it's overwhelming positive, it's good. And there was a series of rules that led to that. It wasn't just every single day. It was, you had to have no hedge pressure breaks, no catalyst or risk interval moves, period. And no VIX risk intervals, nothing. Right? What we call our rational rules now. So under the conditions of all of our rules being rational, which is today selling calls right here was a 97% chance under the small back test to win that trade. Because it was a not, I'm saying that trade's different. It was a don't go situation, right? If it doesn't go there in your 0 days, you're going to win the trade. So the idea was, okay, and then we built the platform, built the rules, and it went on. So Humble has secretly, he's one of our oldest members, on his own, conducted a back test of the past 6 months, because now we have bear market data. Now we have a little bit more information. Our back test modules are built into the platform, will be eventually, but he's been manning it manually because the goal determined if the opening and closing zone occurred within the same statistical accuracy that I did a few years ago. Essentially, and Humble is a very honest guy. He would certainly report anything he found, whether it was throwing our stats under the bus or saying we were full of crap or confirming what we did, if whatever, the accuracy was there. So what he did was he reported that out of 134 trading days, under the condition of no catalyst, hedge pressure breaks, and DD touch. We didn't have the DD rule when I did the original test, so this even strengthens the set further. Of 134 days, the only time you left the zone and went to the other zone without those rules triggering was 95.6%. So very close to the same number that the back test did a long time ago with a much bigger data set, including bear market. Well, I guess the last 6 months has been bull market, but either way, the 134, the number of times you broke the bull zone to go to bear zone, there were 6 times when those lights were red. So right now, as those lights are green, 462 is the bottom, the low of the day. Now, breaking hedge pressure, well, we don't consider that at all, right? So out of the 134 trading days, we closed out of the zone 48 times total. Now, again, of those 48, 6 of them would have been tradable, predicted, and that high probability minus the rules. So if the rules are green or yellow, right, or red or yellow, you had 48 catalysts or hedge pressure break or DD touch or whatever, eliminating that rule. So that was confirming one of the rules. So often than not, we would consider this the low of the day. We don't bet that hedge pressure breaks, etc. Now the original hedge pressure break, like if you open above hedge pressure, you close above hedge pressure, the stat of that was 89% chance when I did the test. So about 11% of the time you open here and close below hedge pressure. So it was 11% chance that rule would turn red to eliminate the other rule. His stat, he said that he did on the longer data set, which is including a different regime of market, was about 25% of the time, which was still great over a bigger data set. So what he said was, I think it was 25%. So even so, on a bigger data set with a lot more catalysts and a lot more sensitivity to like bear market and inflation and well, not bear market, but like recession era, quantitative tightening, lack of liquidity, we can see that hedge pressure is a little bit more easily broken. And my data set was in during QE, during sideways market and bull market. This is that short squeeze market, still overwhelmingly positive and good, or 24%, sorry. Great stats. Amazing stats, actually. And I'm glad to see that those numbers came out. So he said, of those 48 times that you exited the zone and went to the other zone, it was a hedge pressure break that catalyzed that. So it's about to become a new rule. If you break hedge pressure, you do not bet that you bounce on that zone anymore. We used to say it was a coin flip, and now the answer is you don't take that bet. And that's a takeaway. We have a new rule coming from that. Does everybody follow what I'm saying? So what it means is that in reality, when these lights are yellow and red and the red light is hedge break, the biggest takeaway from his stat is you do not long there. Does that make sense, everybody? Because of the times you open in here and close down there, 71% of those included a hedge break. So it's almost more probable that you end up here than there. Now, we're not going to create a rule that because you break hedge, you're going to bet that you go there because it's irrational. But I know now if I'm shorting, I can close out more and hold a runner. Or if I'm longing, I'm not going to want to take that bet. So the DD rule is eliminated with a hedge pressure break, which we already do. We eliminate all of our rationalizations anyways, but now you know magnitude and probability. That's the important stat. We've had a lot of hedge breaks this year. It's a lot more than normal. So 25% has been a higher than normal stat. Usually in like strong liquid bull markets, you don't see that happening a lot. Hedge break meaning that you open here and you close below. If you open above, the bet is, per his stats, 75% of the time you close above. So somebody engaging in like a call credit spread would be like if you wanted to, right when you bounce on hedge pressure, you can sell calls there. And then, I'm sorry, why was I drawing calls on there? I meant to say puts. My bad. All morning I've been saying calls. Don't listen to me. Put spread. You'd sell puts here for the 75% chance you end up over here, and then you can buy puts there to bet that you don't break bull zone. If you break hedge pressure, you would close out the trade. Or even this leg of the trade. So ideally, if you fall into here, you have a higher probability that it goes down here. You want to hang on to those puts. You have a very low probability that it closes up here, so you would close out that leg, or you can hold on to the spread just in case it falls. Ideally, you don't want to be in a situation like this because you lose your entire trade. So one could close out the leg. There's all kind of ways to trade it, right? Which is cool. So those are great stats, and it's cool to see that in a longer data set in an environment we're in now. This would be a more finicky environment, So we'll just a few more to hedge in a little bit. You gotta be careful in the UVXY hedge break today. Could be some volatility. It's still hanging in there. I think just Vixen's perpetual decay over the last. VIX at like yesterday was a low of how many years? Pfizer, yeah. Give me a second. When is this? 20 max available. VIX futures. I've hit a 4-year low yesterday. VIX futures haven't been in the low teens, like the 13s, 12s since before COVID. That's usually the lowest it is too. Sometimes, like I think in the early 2000s, we saw an 8 or 9 or 10, but this is about as low as VIX futures goes. So I think we're really soon to be exhausting this rally at some point, just historically speaking. And now again, I don't bet on that, but be very careful on these hedge for sure break on VIX or like VIX runaways. We can create some kind of event, some volatility. Res is holding pretty good right now. Yeah, I agree with you. VIX is like sitting right on the edge here, so be careful on that. Res is looking okay. So bull market's still looking all right. Let's go to monthly map real quick. So we should be experiencing, y'all probably think should be okay on the yeah, so we refreshed we rolled back our platform after the release that you guys are showing liquidity maps are having some issues. So things should be okay now, back to where they were. We'll have that release redone sometime this week with those bugs fixed. But yeah, we had some drawing issues on the platform and some small connectivity issues, so we just rolled back. It should be good. There's just too many to fix in a night, so I made the decision to roll back so we would have a good experience today. The patch what we're trying to do is fix a couple of major things, like for our final stable build of the platform. Has to do with like drawing, not having to click refresh to have your drawings, etc., things like that. A couple other things. All right, taking a look at what we have in volatility. Hedge breaks to be careful today. This can create spontaneous movement. I'm looking for hedge pressure to support now. Wasn't expecting VIX to break that. But in here is where I'm looking to trade. This is where I'd be out. All right, so again, JP Morgan. All right, somebody said, no, JP Morgan. You want me to take a look at Pfizer? Oh, interesting. Okay, so a lot of times you'll see this in stocks, especially because it's going to be monthly expiration on Friday. A lot of times you'll see a little bit of weirdness on the other side of monthly expiration. Like, essentially what you're seeing right now is an illiquid pocket right now. They call this illiquidity pockets. So it's going to be possibly more volatile leading up into Friday. So if you see it generally short squeezing, long exiting, plus more volatile, right? So it could be some selling pressure on Pfizer, which you've still been seeing that, right? I didn't even look at the chart. Yeah, like Pfizer's just doomed. So individually, just look at the pieces, right? Ignore the fact that there's a flip flop. We'll talk about that in a second. So bear side sloping down, right? That's a short, more shorts, right? Bull side generally sloping up. That's long exit, right? From your so bear side sloping down. Oh, I'm sorry. No, I'm sorry. Don't listen to me. Bear side sloping down is bears exiting. I read the wrong thing. And bull side sloping up is bulls exiting. So you have a lot of people. Shorts are covering. My bad. Shorts are covering. Bulls are exiting. So you have twofold issues. Number one is you have both sides exiting the trade. Bears exiting for profit, probably because we're in kind of a strong bull market now. We also have longs still dumping. So in general, both of these have traders leaving the market. So in general, there are just fewer people trading. So it's going to be more sensitive to volatility, a little more illiquid in general than because you have people exiting the market, fewer people into positions as well. So when you have both sides exiting, often you can see crossovers like this where you see bear zone above bull zone. We call these illiquidity pockets, which means that the market is very, very wild inside of here. It has the ability to be very choppy. This can start to widen very quickly leading into Friday. As both sides, evidence is of which side is the stronger side, they're both exiting targets. So bulls are just giving up, bears are starting to take profit. That's all you can really see. Also an IP right here. Inside, and then you have LPs kind of there, and you can see that the volatility is going up. It's the distance between, right, the spaces. So the volatility is expected to go up, which is again saying that between here and here, the range is going to get wider. Whatever it's going to do, right? It's likely going to continue to keep selling, but these little nice tight days like this are about to get. Let's just assume price is flat. Volatility is expected to go up, right? Typically, that's accompanying sell-off in a less liquid environment would be something that would resist that, would not resist that selling. So ideally, or one may think that this likely has a little bit more downside, wherever your support would be. So that's the takeaway from that over the next month, right? So like this gap down, even if it does move up, it's likely to still be shorted just like the rest of these bumps. That's exactly what I'm reading. So ultimately, over the course of the month, it's looking to go lower. That's the way I read it. So put all the pieces together, and that's kind of what you're left with. So keep an eye out for like monthly hedge or resistance on hedge, like every day with like these kind of setups. I would be still shorting Pfizer personally if I were trading this off of hedge pressures or hedge pressure breaks. Yeah, it's a great way to read it. But I look at it like that. So like, I don't see it as again, if you see that big green day that comes up now, I always look at monthly map every day to make sure I got the same thing. The next step is after monthly expiration, you could see those things drastically change, right? We don't, make sure you always check that following Monday. I'm gonna get that hedge pressure balance and take a long off of that. Just wait for that in just a little bit. Just hanging in there for just a little bit. Just hanging out for this thing, just chilling on this. Not really much to think about just yet. So I think I might get some downside, but still I'm hanging in there with this small position just on some upside move, just in case. Watching paint dry today. Let's get that VIX lower than where we are now. That's all I care about. Let's see this. Watching paint dry. Pretty decent setup today, I think. It's not a hard one to find. The market's still going to try to be bullish, I think. I'm not talking as much as I normally do. You guys have a tickle on my throat. Every time I say something, it starts to tickle and I start to cough. Oh. Kind of scared of the market, and VIX going off like that and price action. Yeah, and the thing is that like it's right, it's just moving above it right now. This is kind of making me a little worried, I would say. I kind of don't like it, to be honest. I just don't really like it that much. I enter at both places. Good question. Sorry about. D. I do both. So I would enter here. If it's up there, I would enter there and there. I play both. So I was waiting to hit that the long again. So that's why I got a small position here to try again here, there and there. So either like this goes, or if it falls to there, I can dive in pretty hard on a second position to bounce on that one. So I play both of them. We'll be able to do backtest in the future, yes. And part of the future widgets of the platform will include backtest modules and other things. So our current pathway is to wrap up what we have now, to clean up everything. Those like last little display bugs and things like that are gonna be fixed. And then create our baseline platform. We're doing a bunch of white label projects right now. We're making rocket seer clones for other big vendors. We're doing that first. We staffed up for that. We got the marketplace coming out. Pieces of that's coming out like literally next week, the week after, like a template for this marketplace for a couple of vendors. And then throughout January, I'll be soft rolling out others, be doing that kind of stuff. And then February, we're live on the marketplace. And then once we have that, then we're going to create a branch off version of the platform, a higher end version of the platform. So this is going to be the free, the one you're looking at now is going to be the free version, by the way. Everything's going to be free. The indicators you'll have to go buy individually, which I'm saying if you're in a package now, stay there. It's cheaper than what it will be. Don't change anything on your end. But then we'll have two versions of the platform to shove your indicators into. One of them will be this version. The other one will be a version with all kind of extra tools, all the AI tools and stuff for building. Rule assist mode, back tester, all that will come in the premium version, which will have a monthly fee. The platform itself will have a monthly fee. The indicators will device separately, et cetera, et cetera. It's part of the marketplace. So about February, give or take, when that is launched, then we branch off and we go back to building features. So it'll be between February and summer, there'll be a drive for us to build then all the rest of the features we want to build. Here with the crowd, load up some juicy puts. Are they selling puts or buying puts? Well, backtesting bring up the liquidity maps for individual stocks. Yeah, it should. You should be able to backtest any of our things that we have over a time period. Again, that's one of the modules we'll be building. I'm not really sure which order we're going to build it in though yet. It's something that's a discussion that we're not having right now. At the first of the year, we'll be scoping out like quarter one, quarter two projects, and so we'll have to see what's needed and the order which come out. But I mean, this is the 2024 drive is to pack out features in the platform. The FOMC announcement. Oh yeah, absolutely. What else do we have? Yeah, I'll come back and do the FOMC for sure. I think that explains a little bit of why we're building some volatility up in the day as well. All right, well, let's cut it, come back at Fed. We'll see what's going on. I'm probably just gonna hang on to like little position here, let it ride. I still think market's still stable enough. We're still looking pretty solid here. R&R is pretty decent to press at least to upper DD band today, so we'll see how that works out. Yeah, Keith, you got to hit the pop-up and do the subscribe on that one. Yes, sir. It's not automatic, so you got to do the upgrade. You never understood how to trade FOMC until I explained it. Years of trying to trade the FOMC, long time ago, I learned trial by fire how to handle that. So glad to pass my wisdom on. All right, so we'll hang on to this one. I'm still taking a tiny little long, nothing big, just to see if it goes, you know, to here. We have FOMC obviously can catalyze things. With FOMC, we want to see VIX in decay. Now remember, we're still going into monthly expirations, so we have to be very careful. This can create a little extended volatility. One would assume, but monthly map shows a little bit of like no fear of this market. This is a straight bull market if there ever was one. Both sides sloping down. This is very, very strong bullishness to this. And like I said, Ash and I were both, I think, on the same page. We said we finished out the year very strong. Yep. All right, let me get one more thing I need to do. We'll come back and reconvene. All right, guys, we'll see you later. Welcome back. Small trade being small, you know. I don't think we're gonna have much takeaway from here. We'll see y'all right at FMC. We love y'all. Thanks for tuning in. We'll come back later and do the good stuff then. All right, see y'all later.